Hi traders, welcome to today's live stream. Hope everybody is well. Gonna get going in a couple of minutes as usual, just give people opportunity to jump in. Gonna go over some charts of interest. Obviously go over a little bit of data as well. And go from there. I'm probably going to take a little bit of a look today as well. Gold outlook 2024. I've just been doing a little bit of analysis on that, looking at sort of seasonal charts, commitment of trader reports, obviously normal economic reports as well. So we're going to take a little look at a gold potential for the year. I'm actually looking at some crude oil longs as well. So we'll discuss that. I actually have one position in the market and I'm looking to kind of build on a potential position there. And that's all driven from the sort of headlines that we saw out of OPEC. So looking to kind of discuss those particular markets as well. And obviously go over a few opportunities in the markets just in general. Fairly quiet news week this week. If we go over to the economic calendar, just bring up this week in terms of sort of data across the globe, we're really focused more on sort of US data this week more than anything. And you know, we've had a little bit of data out this week already, some home sales data out of the US. We've also had some core durable goods orders come up a little bit better than expected. And it's a really interesting dynamic with the US dollar at the moment. We've got the sort of balance of the Federal Reserve that are looking to cut interest rates at least 3 times this year, but then the balance of not risking the fact that inflation may come back to haunt them. That's what they're really trying to find a balance of at the moment, of how they kind of balance that line of making sure that they can potentially cut rates, but prevent inflation from rising too much. So yeah, they've got that balance to try and figure out. But yeah, I like the idea of kind of looking at the potential dollar outlook at the moment, because that will affect a lot of different things, commodity prices, obviously the majors as well. And yeah, I thought it was a good sort of topic to discuss today. So just going over to the dollar index, let's have a little look at how the dollar's playing out at the start of this week. Monday, we had a little bit of a retracement after the sort of rally that we saw. Today, we were also kind of experiencing that little bit of a pullback here on the US dollar index. But what is the sort of longer term outlook? I mean, if we look at sort of the outlook of the US dollar on a monthly basis, we're pretty range bound. We're pretty range bound on the market. We tried to sort of reach new highs going into the end of last year. We kind of failed that. Price came back within the range, came to the lows of the range, started to rally again. And now we're in that sort of mid-range point. And I think this is going to be a big play for this year. Are we going to see some major downside? Are we going to see a continuation of dollar bullishness? And I think the market is trying to weigh up what's going to happen here. Now, if we take a little bit more of a deep dive look into the weekly chart, we can see very strong bullish close last week. Typically on moves like that, I would expect the market to continue to be bullish the week after. However, we are up at resistance, so it may try to pull back towards the 102.75. But because the dollar, the data this week is driven around the US dollar, I think that this is something to definitely be interested in. Some potential longs up into sort of 104.90 is something that I'm just watching very closely at the moment. I like the idea of potentially being a sort of short-term buyer of the dollar, and I like the idea of being sort of short-term, short cable, euro dollar as well, potentially Aussie US dollar. So we'll dive into those. Dollar Swiss also a very good one to look for longer ideas at the minute. Swiss National Bank cut interest rates. They're the first central bank to do so I'm expecting the Swiss franc to weaken. I think as traders, we need to identify opportunities within the markets. One thing that we can do is look at those fundamentals. And if the Swiss National Bank are cutting interest rates, why they're trying to cut interest rates? They want a weaker Swiss franc. Okay, they want a weaker Swiss franc because of the cost of exporting in Switzerland. So Swiss franc weakness is something that as a trader you could look to take advantage of. Hi Vincent, hope you're doing well, buddy. Hope everything's all right with you. Hope trading's been profitable for you so far. Who else have we got as well, guys? Let's leave the stream a like if you can. And we want to try and get the stream up to, you know, at least 10 likes today. That would be my sort of goal for today. And I'll go and deep dive into sort of that gold analysis. What are we thinking of gold for 2024? Let me know what you think as well. What happened to gold in the comments section? I'd really like to see your sort of ideas around what you think gold will do for the end of the year. I'm going to build in my position in a little bit, show you how I'm kind of viewing gold for 2024. But yeah, let me know what you guys think as well. I'll be interested to sort of hear your side of it. The other commodity I'm very interested in buying as well is oil. Again, I did a video on this yesterday, but OPEC cutting that or at least reducing the amount of barrels produced per day, and that is going to continue until June, supposedly, by looking at the reports. So there is good potential that we're going to see the supply of crude oil lowered. And if the supply is lowered, what does that do? It increases the demand for that crude oil, and that should increase the price. So I like the idea of being bullish crude oil. So we'll go take a look at crude oil as well. So let's actually start with crude oil. I did talk about it a little bit last week, and just from a technical perspective, you know, it's starting to look pretty good as well from a technical perspective. I was actually looking for a little bit of a deeper retracement here after price came and found this sort of resistance towards the 80 to 70s, 83 sort of dollar area. And I'd be looking to see a potential sort of pullback in this market and then a continuation to the upside here. I want to see price try and break back to the upside there. At the moment, obviously, we can see prices kind of holding within this area. And what I like to look for is just kind of how is price action forming. So I can see, obviously, price came up into this area here. We had a sort of hold between these two sort of areas. And then consolidation breeds what? It breeds volume within the market. We've then had a bullish breakout of that. So I'm looking for a pullback before seeing a continuation here. But we're getting that sort of similar feeling of consolidation starting to build up. So I do quite like the idea of looking for sort of longs in this market. Like I said, I have a position long in oil down at this $81.70 area. I managed to get in as price was falling at the early sort of US session open, and I ended up taking a position here with the opportunity of being long. So I have a position in at 81. Is it 81.70? 81.57 actually is my entry point. It'll be a little bit different on here compared to the broker price there. Question, Uche. Hi, as an analyst for a broker, why would you want us to make good money off you? So that you stay with us. Simple answer there, Uche. I want you to stay with Blueberry Markets. I want you to trade through Blueberry Markets. If I give bad, you know, sort of ideas around what I'm doing for myself, plus I trade my own personal money, then that's just a bad look for me, isn't it? And I would rather have a reputation of being able to give good feedback of the market and be a good analyst. So I hope you can take sort of what I talk about. And, you know, you should never take anybody's word for gospel, by the way. You know, anybody in this industry, you should never take their word for gospel. Go and test what they're talking about. Does it align with your theories? Do you think that, you know, their theories don't work as much? You know, I have ideas around the market for myself, and that's what I talk about on the live streams and in my videos. Like I said, it's up to you then to do your due diligence. It's up to you to understand the market for yourself. Because one day I might not, be here showing you guys X, Y, and Z, and I'd rather teach you guys how to do it for yourselves. Afternoon, right guy. Hope you're doing well. Right guy, euro pound. Can you do analysis on it to the upside? Yeah, we'll go take a look at euro pound after I finish this oil sort of analysis. So yeah, what I was talking about was the fact that if we go to OPEC, we can go to OPEC home, and you can just, this is obviously the organization, petroleum exporting countries, which is OPEC. You can just go to their website. You can have a little look at the announcements that they give, the report. You can see oil market report March 2024. You can read on sort of developments including oil supply, demand levels, and trends in the world economy. So if you want to do some deep research into oil, then you can come over to this website. But what I was looking at essentially was we had a press release here, and in the press releases it said several OPEC countries announced extension of additional voluntary cuts of 2.2 million barrels per day for the second quarter of 2024. So in my head I'm thinking, well, if we are expecting to see 2.2 million barrels cut, per day for the second quarter of 2024, that means to me that there could be a supply demand issue. That means to me that there could be more demand for oil, which would then lead to the potential price. Or you can look at it in the terms of scarcity, right? If there's a lack of it, then price is going to continue to climb higher. So I like the idea of being bullish oil at the moment. So that's your kind of fundamental little piece. You don't need to do too much in the way of fundamentals in regards to that. Obviously, you can go deep dive and have a little look at what you think comes across with the US dollar. But you can see here, consolidation that we've breached, price consolidating again. In my theory, if price fails to make new lows, I want to be looking for opportunities to buy on those lows. So that's why I've got in long at that low there, 80. For me, it's 81.57. So I've got a little bit of a better price than what is showing here, but it's around about 81.70 on this particular chart because I'm using trading view just to show you on the streams. So that's where I'm long at the moment. I'm looking to see, can we breach this high? If we breach this high and price continues to make higher highs, that's brilliant. I'm looking for then a continuation higher, looking for at least these highs to form, to be tested back from the 19th of March. Ultimately, I'm looking to see, can price come up to more towards this sort of $94 area, where we have this kind of long-standing piece of resistance, which was formed from the sort of weekly highs back in September of 2023. So that's my kind of overall outlook from oil. Now, where's the risk? I always kind of think, where's the risk? Where am I wrong? Okay. And that's where we should be looking at sort of changing our bias at that point. Now, for me, I'm wrong below $80. Okay. We can see that price has formed a sort of level in and around here. If we were to breach in this area on the short term side of things, at least I will be, looking at that thinking, well, maybe price is going to move lower before it continues to potentially push in line with the fundamentals. So from that perspective, anything below $80 for me, I'd be a little bit wary of being a buyer of oil until we kind of reach sort of 76 sort of dollars, and sort of around that area. So for me, I like longs on oil for now, just from a fundamental perspective. So I'll be keeping an eye on this market. But like I said, anything below $80, I'd be looking for a little bit of a move lower at that point. You could argue that technically trend would not change until sort of 77.25. So in theory, we should be long until that price is breached. But, that would be a long way off, I think. So yeah, that's what my feelings are around oil so far. We'll see if we can get any kind of traction there and a continuation to the upside. That's what I'm kind of looking for at the moment. But yeah, let's see how that one potentially plays out. Fan, welcome. Afternoon, John. I'm a bit late today. No worries. No worries. Vincent, I'm in pound short from 26.60 with a stop loss 20. What's your take? Yeah, let's go take a look at. I'm going to take a quick look at RYGUY's suggestion first. We'll have a little look at euro pound. RYGUY looking to long euro pound at the moment. So let's go take a look at that. I can see immediately that we've started to obviously breach some key areas of structure here. So this looks pretty good to me for a long idea. Let's have a quick look at our higher time frames. So into monthly lows here, we've breached February's highs. So yeah, it looks good for a little bit of upside here. If we look at the daily chart, we can see that we've had this period of consolidation between 85.75 down to that 8,500 area, and now we're starting to sort of breach that. Notice the price action at the highs of the range. This is what I always like to look for as well. How does price react at the highs of the range? You've got like a breakout here, but then look at the previous day. It tried to sell off but failed to do so, closed back within the previous candlestick range. I think that tells you a lot about buyers and sellers here at the moment. It's telling me that there's a lack of selling pressure in this market, and that either sellers that did get involved were very, very short-lived, and buyers have started to push back into the market. We've now breached yesterday's high as well. So yeah, I like this for longs, to be honest, Rog. I like the idea of potentially looking for continuations. Again, if we look at it in terms of sort of structure, you know, we have sort of a rally from those monthly lows, period of consolidation, breakout. Is this going to be sort of the breakout of this consolidation period in here where you've got that volume being built up? Is that going to be the break? So what you could essentially look for is, if you do get a little bit of a move away, a pull back in, and then a continuation opportunity to the upside there from this 4-hour chart, which looks pretty healthy right now. So yeah, quite like the idea of being bullish on that market. That looks pretty nice. That being said, I do like cable downside, Vincent. I like cable downside a lot. Let me just put your message here so I can then go over it. Essentially, I like shorts from 126.62. So I mean, you've got in like 2 pips less than that, so that's great. And basically that's all down to volume. You know, if we take a look at the 4-hour time frame, we had an aggressive move to the downside, very shallow pause before a continuation of that move. So, you know, I was kind of eyeing this zone up in here as an area of interest. Now, 126.62 basically forms from volume profiles. So if I bring in the fixed range volume profile tool, go from the swing low to the swing, swing high down to the swing low, you can see there was a high volume node coming in at 126.60. Now, if you want to go and have a little look at that a little bit deeper, go to the hourly chart, just identify this zone in here, and you can see point of control 126.63. Okay, so I like the idea of being short here today. I didn't actually short it though. If I look at the 15-minute time frame, produced a really nice change in structure here. So the market was fairly bullish. Let me just turn off the daily volume profiles. The market was fairly bullish coming into that level, as you would expect. And then what we saw was the market came in, gave a change of sort of trend there in terms of we went from being higher highs and higher lows to lower highs and a new low that formed at 26.50. So for me, I was out at the time, but I would have looked for a short in and around that area. Depending on how aggressive you wanted to be with your stops, you probably would have got away with a 10 pip stop. Probably would have looked for a 2-to-1 target on that and would have been fairly price never really sort of looked back at that option. But I like the idea of you being short here. So let me just plot your entry price. So it's 126.606 and your stop loss was 126.90. Is that right? So fairly large stop there, but I like that. I'm guessing you're still using ATR, Vincent, and you're looking at ATRs above this key swing high. That was the sort of next point of interest if price didn't reverse from that area. So you're about 1-to-1 up at the moment, and I'm guessing you're looking for sort of targets down towards this area here. Now, like I said, I like the idea of being cable short at the moment. I did a video on this the other day, and we had a little look at the futures of let me just leave that one up. Let's go here and here, and we'll bring up the pound futures. Here we go, B6. Go to the COT chart. Now, I did expect a little bit of a bump up first. I was looking for more of a move up to 1.3, but we didn't quite get it. Let me just move this out here. So hopefully you can see this. What we've got here is the Commitment of Traders Legacy reports, right? And what we were talking about was sort of pound futures coming into an area of extremes. And the last time we saw that extreme was when price was here. Okay, so if I just make that a different color because it always sort of reverts back. Let's make it a line there. So around about July 2023, we had extreme short selling from the commercials. Okay, at that time as well, we had extreme buying from the non-commercials. So commercials are in the market for business purposes. Non-commercials are like your hedge funds, your trend followers, things like that. So on the pound, we saw that after that extreme had been met, we fell from around about that 1.3 to around about 1.2, 1.21. Okay, so we had a decent move to the downside. Recently, we had that sort of similar effect. We were down towards that area of extreme here. Let's see if I can copy this up. In here, and the market is starting to sort of sell off again. We've had aggressive sort of buying coming in from the non-commercials, suggesting that this could start to push to the downside now. What I'd like to see is price breach 125. So how that looks on a normal chart, on a candlestick chart, if we go back to daily time frame, is this sort of zone down through here, right? This kind of 125 level. You know, from a weekly perspective, that's where I would be expecting price to go and target down towards this 125 handle. Okay, so yeah, I like the idea of being short here. The only kind of question I have, and this is a sign that I always like to think about now whenever I'm trading in the markets, and what a previous trader sort of mentioned to me, it was almost like, how long do you want to be in the market for? Okay, the longer you're in the market, the more dangerous or the more likely you're going to be giving your profits back, essentially. And the way he kind of said it was the fact was, you know, think of the market as a sort of tiger or a lion. You know, how long would you want to spend in a sort of box room with that lion or tiger? You won't want to spend very long in there at all, would you? So that's the why I kind of look for sort of higher time frame direction, but look at trying to take a little piece of the market as it goes down or up, essentially. So yeah, I liked the idea of being short around here today. Didn't manage to get my entry, which would have been that break of structure there on the 15-minute time frame. I'd have been short here. Stop losses for me at that point would have been above that swing high, and I'd be looking to see, I'd probably have some off right now because you're at support, but if it breaches support, sign of where's the next sort of area of support and resistance. If I just pop the volumes back on the chart, you can see down in this area here towards that sort of 126 handle, you start to see your volume start to pick up again. So that's something I'd be wary of. If I was short, that is something I'd be wary of, is this kind of volume, especially down towards 126. You can see you have a high volume node in and around that point. So that's why I would like, you know, or I would expect to see a run down towards this area for a potential continuation at that point. But yeah, this looks pretty good. I like the idea as well. If if you're not in this trade, how could you look for opportunities on this? I'd wait for the daily close first. I'd wait for a daily bearish close, and then I would look for opportunities on that. So let's go to sort of an hourly chart. I'd be looking at sort of highs and lows that are formed in the market then. So let's say price continues down for today. Tomorrow, I'd be looking for a pullback into this level of sort of volume, again, consolidation. And then if price kind of makes its way outside of that, I'd be looking to try and target down toward these sort of lows down through here. Okay, so definitely something to look out for, a bit of cable downside. So hopefully that explained everything for you there, Vincent. Irvin, can we look at dollar CNH? I'm looking for longs here. Looking for longs there long term. Yeah, I don't think I have actually that up, but we can definitely get it up. Let's have a little look. We just add this to the watch list. So looking for longs here. Okay, so this is the monthly chart. Dollar absolutely just ripping at the moment. Interesting dynamic here, isn't there? I actually don't know the ins and outs of I just want to see. I wanted to see the latest report out of China in terms of their medium long-term rate. So I can see a couple of different articles out here already saying China uses surprise data announcements to counter economic gloom. Yeah, housing market's not looking particularly great. Have a quick flick over to trades and economics. So look at the GDP. Yeah, GDP still on the decline, isn't it? Last quarter, Q4, 1%. Don't know what forecasts are for this quarter. No consensus there, really. So a little uptick in inflation. Obviously, manufacturing PMI is sort of big in China as well. We're not really seeing, I mean, it is technically driving a little bit higher there. The only thing I'd worry about is obviously the fact that we're coming up to such a huge level. That would be my only concern. I like the idea of thinking long term in terms of what happens if we take this level out and it continues to, go higher from that point. That would definitely be something that interests me. But would sort of investors be looking at this thinking that this is cheap right now? Right? The last time we kind of came into this area, had a good sell-off. Last time, back in November, the sell-off wasn't as strong. Now that is usually sort of indicative of a breakout, in my opinion, from a technical perspective anyway, when we've usually got a level of sort of support or resistance and the market kind of tries to find buyers, and then the next time it tries to find buyers, you don't see the same amount of volume, then often we can see sort of that happen. So that would be a sort of concern in here, but I don't mind ID as long until this area. Then you have to think about your risk reward ratio and think, is it worth holding risk at that high when you've had sort of sell off like this, or, you know, sell off like this? So what are your thoughts? What are your thoughts, Irfan? Let me know. You might have studied this a little bit more than me. I've been focused mainly on those sort of US assets. Another market I quite liked is actually FTSE. I'm actually long the FTSE right now. Typically when we see sort of pound move lower, we can see the FTSE sort of perform a little bit better. But if we look across sort of the stock markets that haven't really kind of performed yet against kind of others, so if we look at the S&P 500, for instance, you know, we breached the highs that formed back in 22, back on the sort of 22nd of January, or that week of the 15th of January, and we've been pretty bullish since then. Nasdaq the same, Dow the same. If we look at the DAX, very similar. Nikkei obviously went on a huge run and doesn't look like it's slowing down anytime soon. Whereas the FTSE is kind of trailed behind a little bit, and I think that's a potential to see a little bit of a move higher here. Obviously, the Bank of England, who were expected to not cut rates as soon as kind of every other central bank, that's starting to fade a little bit now. Obviously, the last report that came out, we saw a lot of the members decide that, you know, there was no need to hike any further. So the end of the tightening cycle's essentially done, in my opinion, unless obviously inflation kind of comes back with a bang. But that could be a sign that we're going to see a little bit of upside here as well. So I've actually took a position in the FTSE long this week. Obviously, we breached this area of interest as well, and the market has continued to sort of drive higher. And I was watching this kind of 4-hour time frame as well recently, because we obviously paused in the market here, and then the market has obviously, you know, found support and rallied. Sorry guys, I can hear my oil alert going off, which is meaning that price has come back a little bit, which could be an opportunity for us to have a second entry. So let me just have a quick look at that on my other screen. Okay, a little bit more downside. If we could get to sort of 81.20s. Sorry, I will jump back over. So my trade's a little bit offside right now, but that's okay. I didn't put full risk on, so because I was hoping that we'd get a little bit more downside in terms of the 4-hour chart. So I'm looking more towards this area here. So I wouldn't mind a little bit more downside here. Let me just put a little, let's have a little look at volumes in this area. So volume starts to pick up around 81.20. Got a point of control at 81.50 here. So maybe around $81 there. I could look for a sort of secondary entry into the market. Starting to break down this little structure area here, but obviously, like I said, this was the area I was interested in. So you kind of got a value area high 81.35, value area low 80.54. Yeah, let's see if it can come a little bit lower. I wouldn't mind looking for entries around this area, to be honest. Let's see if that pulls back. Also, you know, if price breaks back above that 50 MA as well, that could be quite useful. I'm going to start putting alerts down at 81.35. I think that would be a good place to look for longs. Fib that up a second, that previous day's candle. Let's see if there's that price is around the 50% mark or below. It is. So that kind of works well for me. I like the idea of price being below that sort of 50% level. Makes me think I'm getting a bit of a better deal there. Let's see, where's that volume really kick in? It's around 81.23s, isn't it? Let's see if I can get an entry a little bit lower in this pocket of volume there. That would be nice, I think. But yeah, before I got distracted, yeah, I was talking about FTSE. I'm long FTSE at the moment. I can see cable's broken out nicely as well. Let's have a flick over to cable. Yeah, nice little breakout of this area. Quite like that. If we can see a little bit of a rejection coming back through there. Yep, some details here from Irfan. Yeah, dollar Swift behaves similar to dollar yen. Currently, I'm looking at daily time frame and looking for any opportunity to the previous highs you pointed. And holding expectation for this level to break. Merely technical, fundamental, the data coming from China and USA is mixed. Yeah, I was actually looking at the where is it now? Don't know if I've got it open on this chart. Oh, sorry, just punched the mic then. Yeah, so I was looking at the sort of HK50, the Hong Kong stock market, and I like again how low we are on this. Again, I don't really know the correlation here. Maybe we can try and match it up. I imagine it would be fairly inverse by the looks of things. Let's just put that on a line chart. Let's go to compare. Just grab this. And I need to put you on the left. Yeah, so we've got a pretty inverse correlation between the US CNH versus the HK50, the Hong Kong 50. Yeah, we can definitely see here that when we do get that kind of peak and the market moves down here, we get that sort of rally in the HK50. So I do think this extreme, that if price does reach that extreme, will this be considered fairly cheap at that point? You know, so it'd be very, very interesting level. I definitely think we should probably mark up some type of alert around that point. If anything, if it's for looking for the breakout or looking for the sort of reversal side of things at that point. But yeah, we've got that fairly nice inverse correlation here. A little bit of a similar correlation going on at this point, where you can kind of see that we've got HK50 moving lower there. So did the US dollar CNY, CNH, sorry. And price then did rally. We did get that little bit of inverse correlation, but there was some positive correlation at one point. So yeah, I think that's quite an interesting thing to look at, because sometimes it's easier to look at one sort of area, but there's an advantage to looking at both, you know, and I think that could be a good thing to have a little look at. Let's just turn this back to candlesticks. So maybe alerts down here. Have a look. How do I get that back? Regular. There we go. So around about 15,000 on the HK50 could correlate pretty nicely to that sort of 73.36. So I'm going to add some alerts there. If those alerts go off, then maybe it's something we can explore in further detail. I might have missed that oil move. Hopefully that can come back a little lower. I was just looking at the 30-minute time frame. We're getting this kind of nice little sort of rally in here. This nice little sort of pin candle coming up. But it's still early days on this 30-minute candlestick. So hopefully, you know, if we do get down towards 81.25, I could look for a second position in the market at that point. No point adding a position where I'm already kind of added in. I'd rather be adding a position on deeper sort of retracements there, or if we get some really positive outcome here in terms of market rallies, forms a new low, then maybe that could be a good sort of add in as well. Let's have a little look at any other indicator that might give us a little bit of opportunity here. Let's just put in a stochastic. Have a little look at the stochastic on here, whether it's got any kind of divergence forming. So I'm going to change this to 15.33, smooth that out a little bit. So at the moment, price making lower lows, we're getting higher lows from the stochastic there. So a little bit of divergence as well coming from oil. Now, I always think it's important to have a strategy in place, but it's also important just to have a little bit of a discretionary view of the market, a little bit of fundamental view of the market. You know, for me, it's just about trying to identify an area that, you know, if I want to be bullish in the market, what's an area that's considered cheap? You know, if I want to be bearish, what is an area that's considered, you know, expensive to be a buyer at? So that's what I'm kind of looking at the moment. I can see cables pull back a little bit more. And that's the worry. Again, that kind of brings me back to my theory. How long do you want to stay in a market for? You know, if you look at this from an hourly point of view at the moment, what you don't typically want to see, although price could obviously continue to remain bearish, as a trader, you've got to monitor sort of that opportunity there. And I mean, look at these lows. Is the market going to hold above that low? That's what you don't want to see. I want to see a close below that low if price is going to go target the next area of volume down into this area. Sorry guys, I'm just trying to drink my tea without the microphone being hit. Leo, I have a question. How can someone become a market analyst? Do you have to study finances or just show that you understand the markets? I think it's probably a little bit of both. I didn't study anything. I just kind of self-taught myself, and that was enough for me. But yeah, I mean, there's loads of places you can reach out to, and you know, if you've got good analysis, or you know, you can have like guest appearances and stuff. I used to do a lot of guest pieces on Forex.com. So yeah, and I know there was one. I think actually as well, if you've heard of the 5%ers in terms of the prop firm, the proprietary trading fund, they actually have an area as well where if you go to, I think if you go to about and you go to their sort of partners area, you can where is it? Oh, write a guest post. So I think the thing to do, if you are interested in this kind of field, is try and get your name out there in terms of do stuff for yourself or do stuff on different pages, get yourself sort of published in a few things. That always kind of helps in terms of getting your analysis out there, and then you can use that going forward as to approach companies. That's the way sort of I did it. I just posted some analysis, did regular analysis, and then ended up sort of getting in touch with the right people. But I know a lot of places ask for some kind of education and whatnot. But I think if you have a good understanding, then that also helps and goes a long way. Let's go flick over to gold then. So obviously earlier I did talk about the idea of potentially looking at past a couple of FTMO verifications. Would that count as valid? That's a good question. That is a good question. Hey Bongo, hope you're doing well. Thanks for joining. That's a really good question. I think it depends what you want out of it, Leo, right? So are you in this to sort of just become a full-time trader? I think if you are trying to become a full-time trader, then being an analyst is very difficult. I found the transition to be very difficult, and I only really trade specific sessions now, or I have a view that I'm trading more swing trading based, so I have to look at things a little bit more on the bigger picture, depending on sort of the outlook for the week. Usually, if the news is there's a lot of high impact data, then I can do some sort of day trading for that week. So last week I did a lot of short term opportunity moves. This week I'm back to kind of looking more at swing trading again. I think depends on how much time you have, because there's a lot that goes into being an analyst for a broker. There is a lot, you know. I do a lot behind the scenes that you don't necessarily see. So I think if you've got the time and that's your interest, then absolutely, you know, go for it. You know, who am I to say don't go for it? I think anybody can do anything if they put their you know, their right effort in and give it a good go. So yeah, it's just completely up to you. But if you've got those FTMO accounts going and you're doing really well on the FTMO accounts, do you really want to give yourself essentially more work? You know, that's the way I would kind of think of it in a way. So yeah, let's take a little look at gold. I think, to be honest, gold, in my view, is bullish. There's a few bullish signals that I like in terms of gold. Now, obviously, the outlook recently has been good, isn't it? You know, this year, gold is up at least 8% plus. We are breaking into all-time highs, or breaking at least key levels in terms of, you know, 2150 here, for instance, and reaching nearly $2,200. I think if the Federal Reserve begin to cut interest rates as well, that's only going to potentially add some weakness to the US dollar, which is then going to impact on the price of gold. You know, commodity prices could actually perform very, very well off the back of this. And that's why I quite like the idea of oil longs as well. So I don't just mean gold could probably go long off the back of rate cuts. We could see gold bullishness, you know, other sort of commodities, copper, aluminium, things like that could potentially be pretty good. Now, gold, why do I like gold? Well, there's several things that I quite like. So if we go take a look at the seasonal chart first, gold around March can find a bit of a low in the market, and then we can typically see a rally towards sort of the end of the year. Obviously, there are some points where we can find peaks in the market, but pretty in general, you know, this is a 20-year average. gold performs pretty well, you know. So that to me is an opportunity in itself, potentially. You know, if you look at the average for the past 20 years, obviously you have to take seasonality with a little bit of pinch of salt, but because the market may not follow it that particular year, and we are obviously coming up to an election year in the States, so that may shift things slightly. But you can see, obviously, March, usually there is a little bit of a bottom in the market, a little bit of a top in April, and a bottom in June. And then that June low, you know, usually we get quite an aggressive move higher. So from a seasonal point of view, gold can be fairly bullish. If we take a look at the futures, we take a look at the commitment of trader reports. I really like using commitment of trader reports when it comes to commodities, because obviously the commercials have a real, you know, it's quite easy to understand commitment of trader reports when you think of it in terms of supply and demand. Okay, and like I said previously, when we're looking at the sort of pound futures and whatnot, gold isn't at an extreme yet. It's not an extreme, and that's where I would be looking to take advantage of commitment of trader reports, is when we get a balance of non-commercials being extremely directional in one particular way, vice versa with the commercials. And if we look at the sort of commercial side of things, you know, for me, the big talking point would come if we saw the commercial shorts anywhere near 300,000 or below. I think if we got into that kind of scenario there, I would think that there was a particular top coming in the price of gold. Now, if you think about it, price is above these levels, right? It's above these levels that formed back in July of 2022 when the market was rallying quite aggressively. If we go and have a little look here, at that time as well, you know, we'd peaked into new highs, we'd pull back, we then peaked into sort of highs here. And at that point, the selling on gold was fairly aggressive. And we saw that sort of downturn from, you know, $2,067 down to $1,600. I'm looking for something similar again. We're breaching highs again, but we're not seeing the level of selling from the commercial side of things. So I would really like to see, can the commercials get down into this area here? Okay, so I'm just going to put that as a sort of purple line. Can we see commercial shorts down towards this extreme that we found back in March of 2022? Vice versa, if we take a look at the non-commercials, you know, they're fairly bullish. Okay, the contracts are going up. We have come into that sort of high here, so they might be backing off a little bit. But we haven't met that certain extreme yet that I would be looking for. I would want to see non-coms kind of reaching this area, comms reaching this area, and that would lead me to think that there's a top coming in the market. So I don't think gold's done. I don't think gold, in terms of bullishness, is done here. I think we're probably going to see a little bit more upside in the price of gold. Now, as traders, obviously, it's, you know, trading is a very difficult thing to do. You know, you can be on the right side of a bullish market and still lose when it comes to trading, because you might be using tight stop losses, things like that. So it's very important that we point out very good areas of support and resistance in terms of where does it make sense for buyers to get back involved with the market, where does it make sense for sellers to get involved with the market. Now, from a daily chart point of view, I like longs above this area, this $21.50 area, which I think we spoke about before. I like longs above this area. So if price can remain above here, I think would be fairly bullish. So if we even saw price kind of come back down towards this area of support, if we started to see some buy momentum here, I think it would be good to be a long, or good to be long gold. I'd be looking at sort of first targets in and around these highs, just in case price kind of retreated again and we remained sort of fairly range bound. But essentially, you know, the price of gold could move a lot higher. You know, I know some analysts are pointing more towards sort of $2,500, which is pretty significant. So for us, it's about making sure we're on the right side of the market, also making sure we're on the sort of side of the market where it makes sense in terms of risk reward ratio. Okay, now very similar to oil in a way, we've got this kind of consolidation. Okay, and the market's broken out of that consolidation. We've retested this resistance zone, okay, between sort of $2,200 up to 22.08, 22.10s. That consolidation there. Again, what do we see in these periods here? We see volume. Okay, volume would be produced here. Volume would be produced here. How does the market react to those points? Sellers have obviously got involved here, so you've got to be a little bit careful of that. But do we start to see any kind of buying coming in here? Okay, now one thing you can do is just look for simple sort of market patterns. Okay, you don't have to make things too complicated. You can see here the market came into there rejected, but do we get some kind of second touch, a rejection, price essentially failing to make new lows and a move higher? You know, that could be something to look at. You go down to a 15-minute time frame. Do you see the same sort of patterns? Do the markets consolidate in here? That would tell me that the sellers are thinking about getting out of the market at that point, because if someone's short from $2,200 and this is their target and they exit those shorts will turn into buy positions. Okay, so what we need to figure out is, are sellers getting involved here, or are they likely to not? Okay, as a market extends down, the likelihood of it continuing to go does start to fall, right? So I would say that if we kind of held in and around this area but started to breach back above this current zone of consolidation, obviously we may move lower, consolidate, but if we can kind of hold above that and start to break into new highs, I think that could also be a good time to jump back on the sort of gold move back to the upside there. So a couple of different scenarios to think about. You know, if I look at the price action that's going on here, how I would normally trade it is by looking for price to make a low, which it does here on the 15-minute time frame. You can see higher high, higher low on the candlesticks here. We then get a breach of that. That would be a change of sort of momentum for me. That would be a good sort of effort to go short. Do we have a change of kind of structure here? No, price is still bearish on this particular time frame. So I need to see that change before we even consider getting involved with that. You know, if we look at it from a 5-minute perspective, yeah, look, we've got that sort of pattern that I was talking about earlier. Markets found buyers, but what do you notice between the buying here and the buying here? There's a lack of participation from buyers. So the market's rallied. We're kind of creating that sort of triangular pattern. So I wouldn't be surprised here if we did start to break lower again, and maybe move towards that sort of 21.75, you know, and then maybe start to trend back to the upside. But essentially what we need to wait for is price to start breaking highs. Essentially, can it break 21.80, 21 sort of 86? Can it break that area there? And if it can, that's when we can consider looking for opportunities on gold again. But at the moment, if I was a buyer here, I'd be panicking. And if I'm a buyer that panics, I'm going to exit my position. If I exit my position, that's going to be a sell. Okay, that's going to turn into selling pressure. So I'd be very worried if I was a buyer here at the moment. Let's have a quick flick over then and have a look. Let's actually let me just put an alert there, sorry. So on the 15-minute time frame at the moment, the high that I'm interested in breaking is this one. So I'm going to set up an alert there. Obviously that can change if price continues to move lower. Just quickly flick back over to oil then. So we did end up closing back above, which is good for my initial long. Yeah, you know, that's good for my initial long. But I would have liked to have tried to gain another sort of long idea in here. So I have to wait and see. Well, I'll see if I can get that kind of deeper retracement. And like I said, the other market that I like the idea of being bullish on is the FTSE at the moment. Let's take a little look at how the FTSE is doing. kind of just meandering around here at the minute. But we are starting to kind of be a little bit bullish again. I think buyers would be worried if we started to break into new lows at that point. But market is looking fairly bullish here for the FTSE. How long have we been running? An hour, blimey. I didn't realise we've been running an hour. So I'm going to leave it there, guys. Thank you to everybody that joined the stream today. If you could leave me a like, I'd really appreciate it. I'd love to get this to 10 likes. I am still working on competitions for you guys and potentially some trading credit. So I am still working on that in the background. But if that's something that you'd like to see in the streams as well, hit that like button. I'd really appreciate that, especially if you are kind of watching on YouTube at the moment. And just give a shout out to everybody that kind of asked a question today. So Vincent, Uche, Ryguy, Irfan, Chris F, thank you. I didn't see your message there, but thank you. And Leo, hope my sort of information helped in any way, shape or form. But yeah, thanks for everybody that joined me today. Really appreciate you taking your time to come and watch and taking time out your day to come and watch. I hope you found it useful. Like I said, markets that I'm fairly interested in at the moment is definitely oil, gold, and looking a little bit more to the stock markets at the minute. And yeah, we can go through some other markets as well on Thursday. So thanks for joining me, guys. Please like the stream if you could. I'd really appreciate that. And I'll catch you in the next one. Cheers.